Hello traders and welcome to my channel. Here in my channel I teach and explain in details how you can start trading the synthetic indices, and I also make sure I give you updates on how you can scalp the market as a beginner using your mobile phone and any other device, either your laptop, your desktop. But the main thing, I give out strategies that can enable you grow your money on a daily basis. So please, if you are new to my channel, kindly put on the notification bell, hit the like button, and also subscribe. Then if you have any opinion, you can state it or comment it in the comment section. Because here in my channel, I'm making sure that everyone who comes here gets value from here. So please, when you put on the notification bell, anytime I put out content like this, you'll be among the first that's going to be notified by YouTube. And then please share so that this will help others who are interested in making money via trading to get all this information. And also, it will also boost the YouTube algorithm to boost out this content to other people. Um, all said and done. In today's topic or today's lesson, what I want to teach you or what I want to explain to you is market structure. You see, some people don't have much information or they don't know about what price is doing. And for you to understand what price is doing, we need to start with market structure because that is the backbone of price. That is what determines the movement of price. So I've put down a little note. Please, you can just jot this down so that you get one or two information to add to the one you have before. I'm still going to do the practical part where I will show you in the chat, then also show you how I use a very unique software to make things easy for me. So please stay tuned because before the end of this video, there are some things I'm going to explain that you need to pay attention more. That's going to help you make more winning in this trading. If you are trading synthetic indices and you have been losing, you have to pay attention to the end of this video so that you get all this information. Now, in today's topic, I said we'll be talking about the title break of structure or break of market structure. Now, coming to the introduction, in the dynamic realm of financial markets, traders are continually seeking strategies that provide an edge in making profitable decisions. One such strategy that has gained popularity in the break of is the break of market or is the break of structure or a break of market structure. This approach involves identifying key points where the market trend undergoes a significant change, opening doors to creative opportunities for traders. In this article, we will delve into the break of structure and outline 5 advantages that make it an indispensable tool in traders' arsenal. Indispensable tool in traders' arsenal. Now, what this is just talking about is many of you, most especially the traders who are just new or people who are new to this system, they are looking for strategy just to make profits. So for you to make profit, you need to understand the movement of price. And talking about the movement of price, you need to understand what market structure is. That is why I said you have to stick to this video because I'm going to show you practical aspects and also explain in details to you. Also tell you the advantage of having this knowledge of what market or price is doing, and also show you softwares or tools that can enable you or make it easier for you as a new trader to identify areas where market has broken structure. Now, understanding break of structure. Break of structure refers to a decisive shift in the established trend of a financial instrument, marked by a breach of critical support or resistance levels. These levels act as psychological barriers for market participants and, when broken, signal a potential change in market sentiment. Traders traders keen on maximizing profit utilize the break of structure to anticipate trend, reversals, or the continuation of an existing trend. Now, what this is talking about, or what we just read here, is telling us that for you to understand market structure as a new beginner is for you to be able to have an edge in the market. Because when you understand the market structure, when these areas or the structure of the market changes, you'll be able to identify what the trend is doing. Is there a change from the uptrend to the downtrend, or from the downtrend to the uptrend, or is market ranging? So this is where you make your decision. This is where you know your risks to your reward. So this is what market structure is all about. And as a trader, or who has been trading before, or who is just planning, or who just newly joined, this is the number one thing you have to have in mind. Every other thing comes after understanding market structure, because market structure is the backbone of every pair or currency out there, or backbone of the trend, I say. Now let's quickly see the advantage of understanding market structure. Advantages Advantage of break of structure for traders. One, early trend identification. It helps you to identify what trend is doing. It helps you to know if this trend is bullish or bearish. That means if it is uptrend or downtrend. Recognizing a break of structure allows traders to identify potential trend reversals or continuation early on. This foresight enables them to it enables them to position themselves strategically, capturing the initial phases of a new market movement. So when you identify the structure as a trader, it helps you to identify the trend, and also it positions you to determine when to place an order either for sell or for buy. Then secondly, clear entry and exit. That is it. The break of structure provides clear entry and exit points for traders. When a significant level is reached, it signals an opportune moment for traders to enter or exit position, minimizing ambiguity and enhancing precision in decision making. Yes, when you have the clear knowledge of market structure, this helps you to identify your areas of entry and exit. If a market that has been giving you higher high, that you have taken an order for buy and is giving you higher high, all of a sudden break the low, the higher low, then it is a signal that there is a change of what structure from maybe uptrend to the low downtrend. So if you have been holding buy for long, it is time to exit. Then if you are anticipating for a movement towards the down before you enter, immediately there's a break of structure or the break of the lower trend, lower high, then you'll be waiting for market to give you a setup for a down move, then you take your entry. So that is why many people can't do away with what we call market structure. If you are new to the trading platform and you don't have knowledge of market structure, then you have been trading, it means you have just been gambling all through. So you have to know more and understand the concept market structure to enable you position yourself in this market to make money. Scalping involves understanding market structure. Swing trade involves market structure. So whichever pattern you are using, whichever strategy you are using, if you don't understand the concept of market structure, it automatically means you are only gambling. So for you not to be a gambler where you'll be losing your money to these brokers, you need to know and understand what the movement of price is and when to enter, and also to identify when to exit. Now, three, risk management. Yes, traders can employ break of structure to implement effective risk management strategy by setting stop loss order beyond the broken levels. They can limit potential losses in case the market moves against their position. This disciplined approach helps maintain healthy risk reward ratio. When you know your market structure as a trader, it helps you to what? Minimize your losses, because we all know that if you are taking a buy order, definitely you need to put your stop loss at the swing low, so that when price go against your prediction, it doesn't take much of your equity. Then when you put your take profit, you'll be able to see your take profit, you're able to weigh your take profit compared to your stop loss. Many traders are scalpers, they always scalp, they don't have all this in place. If you are scalping and you don't have this knowledge, it means you are only playing, or you are only trying to just give out your money to these brokers. So for you to be a scalper, you need to understand market structure. For you to be a swing trader, like I said earlier, you need to understand market structure, so that you know possible area for you to exit. Because some people will keep scalping and they don't even know what the trend is like. They don't know when the trend is going to change. They don't know where to start their analysis from. And this is a big uh, uh, risk out there, and big problem many traders, most really the new traders, are having. That is why they keep making emphasis that brokers are taking their money, whereas they are the cause of their loss, because they are not starting from where they ought to start from. Some are busy looking for strategy up and down, but they don't have the knowledge of what market structure is. So for you to have a strategy in place, definitely it means you must input or understand what market structure is. Now, improved trading timing. Timing is crucial in trading, and the break of structure aids traders in refining their timing. Waiting for confirmation through a break of structure ensures that traders enter the market when the shift in trend is more pronounced, reducing the likelihood of false signals. We can see it now that this is another strategy that that means break of structure is a strategy on its own, and it's a must for every trader to understand this. It helps you to know when exactly you are to take entry. Some people will just dive in because they see maybe price is giving a bearish candle from the top, so they conclude, oh, it's a downtrend. They enter. You might enter and succeed, you might enter and fail. If you enter and succeed, it means that trend has not ended. That is why you succeeded. You may enter and fail. It means you entered at the wrong hour. Maybe you entered at when price has decided to shift or take a reversal or make a pullback. So this is why you need to understand market structure, so that you will not enter at the wrong hour. Immediately when you see a trend, you know, okay, this trend that is going, where is this trend going to end? What is the possibility that this trend will continue like this? Why must I wait for market to give me a signal that this market will not, uh, this price will not change from this direction? So market structure, understanding market structure will save you from all this and put you in the right position. Then lastly, it enhances profit potentials. Yes, when you understand the market structure as a new trader, it enhances your profit potentials. That means your risk to reward will be very okay. You will make more profit compared to your losses. So you'll be able to balance the market. You'll be able to balance the movement of price. So this will put you in a position whereby you won't be like other traders who are just gambling in the name of trading. No, many of them out there are gamblers, most especially the new ones, because they see their friends or they see somebody posting earnings from trading. They feel it is so easy. So they just look for a little strategy that will just give them profit, and they venture into it. And before you know, they start complaining, no, this market is not biased, it's because I'm new. They know that no broker have time to take your record. There are so millions of brokers out there who are trading in that platform. So if you lose, it means there's something you are doing wrong. For you to correct it, you need to sit down, re-strategize, understand what price is doing before you start trading. So, and the only solution to that is to understand market structure. Is to understand market structure. Trading opportunity arising from a break of structure often come with significant profit potential. Like I've said earlier, by correctly identifying and acting upon these breaks, traders position themselves to capitalize on extended price movement, leading to more sustainable substantial profits rather. So this is the advantage. There are more advantage to this, but I don't want this video to be too long. So for those of you who are new into the system, who have been making losses, now you should know that the reason why you're making losses is because you've not understand what market structure is. I told you we are going to do the practical aspect where I'm going to tell you in a practical term what price is doing, and also show you a software that can aid you, so that if you are interested to join my training class where I use this software, there are software I've put in place to make trading easy, even if you are a newcomer or you are just starting today. With the aids of those software, you'll be able to understand what price is doing easily as a trader on synthetic indices, most especially on synthetic indices, because when you have a strategy in place, you'll be able to make more win compared to a loss. But when you don't have strategy in place, even though you are scalping, it is just for, if you make profit today, there's possibility that all that profit will be lost the following day. So before we come into other trading principles, we need to understand what market structure is, and that is the backbone of price movement. Then in conclusion, in the world of trading, the break of structure stands out as a powerful tool that offers traders a strategic advantage. Its ability to provide early trend identification, clear entry and exit point, effective risk management, improved timing, and enhanced profit potential makes it a valuable component of a trader's toolkit. As with any trading strategy, it is crucial for traders to combine break of structure analysis with sound risk management and true market research to optimize its efficiency, effectiveness, and navigate the financial market successfully. So, and that is all about understanding what market structure is and the advantage. So now, in the practical term, what is this market structure? How can you identify it as a trader? So that is where we go into the practical aspect. Now, coming to the practical aspect, in my previous video where I state that there is steady movement of price, if you have not watched that video, go and watch it. It will also help you to understand it. But I'm going to give you something similar today in this very video. Now, when we're talking about market structure, this is how market structure is. It might be easy to identify here, but when you get to the chart, it becomes complex. Don't worry, there's a solution to that. Now, this is price giving us an impulse move before. That means this is price. It was going up before. All of a sudden, we see this price coming down. It get to certain level. What? Sorry. This price get to a certain level. What we just notice is a move like this. And this was the last high of the market or of movement. Price has broken it. Immediately price break this. Here becomes there's this is referred to break of structure. So as a trader, before you take entry in this kind of case, listen to where I said some of you make mistake, or some of those of you who are new into trading, you make mistake. Just because they see this price moving up, maybe at this point, Mr. A, Mr. A who was standing here, who just joined trading last week or yesterday. Sorry, I want to make it practical for you to understand. This man who just joined trading yesterday saw this move that price is at this point. Just because price is here, he said, "Oh, price has started going up." So he decided what? He decided to place a buy order at this point. He decided to place a buy order. And see what happened next. Price, just a few minutes, he placed the order, price started dropping. Being because he's new to this system, he doesn't understand what price is doing. He said, "Oh," before you know it again, he what? He cut or he closed the trade. And at this point, he made losses. Maybe when the price was getting to this point, let me tell you the mistake and errors many of you make as a new trader. When the price moves to this point, He said, oh, this thing is going down again. Immediately he waited, he was not too sure. And when price got to this place, he opened a sell order again. He took buy here. I want to make it practical. Please just pay attention. He took buy here. Price was going against his order. And when it gets to this point again, when price got to this point, he took sell. Can you imagine? The next thing, price got to this point, which is called order block in other times. You go towards my video, you understand it more better. When price got here, see what happened. Price, sorry, let me use the normal. When price got to this point, price moved up. At this point, he was still holding sell. He was still expecting price to come down. And again, price broke and created another structure here. So, at this point, what he will be saying is like, these people are what? They are trading against him. They are making things uncomfortable for him. And what do you see again? Price will break down to this point. And the next thing you will see again, price will create another break of structure. So in this type of movement, it is called bullish movement. So at this point, because this man is new to the system and he doesn't understand what market structure is, he will be frustrated, and before you know it, he has made huge losses. Because he made loss of taking buy here, he might have multiple his entry for sell. So that will increase his loss. This is the error and mistake many new traders are making, that they are complaining that brokers are being biased. That whenever they try to make place order, the trend changed against them. The trend didn't change against them. It was just because they didn't understand the movement of price. So I believe by now you should see why and the reason. So you should see the reason why you should understand market structure. So the movement of price like this. As a trader, when you notice a break of structure, you don't take entry immediately. You wait for price. For you to be sure that this break of structure is certified, we want to see price come into that zone. That is why we have what we call order block. It's in my channel. When you go through my videos, you see them, even in part of my strategies where I explain. So at this point, there is what we call order block here. That one will be, I will do a video on that. If you want it very fast, kindly share this video and subscribe so that when I make the video for better understanding, you'll be part of those who will be notified immediately. So as a trader, this is the point where you need to take your buy. Your stop loss will be at the swing low, maybe somewhere around there, or a few pips below the entry. So that when price decide to counter your entry, you will not lose more compared to the man who took his entry at this point before, who took the buy entry. So the next thing, for if you are new and the price has been going up, or maybe you have seen market doing has been moving towards the upside, maybe you are unable to join at the early part. What you need to do is you need to wait to see market come to break this high, right? You need to see market break this high, immediately price break this high. So this become your area of interest. So the next thing, you'll be waiting for price to come down towards that zone. This first move is called the extension. The pullback, this one is called the correction phase. When price is moving up, it's called expansion, and when it's retracing back, it's called correction. So when you pull back, then it gives you a formation of continuation. That is when you place this is where you come and take your entry, then you put your stop loss at the swing low. Then what you see next is like this. So when you see price giving you this kind of move, it is called uptrend, because price keeps breaking structure, breaking. That is what we call BOS. You see some software will tell you immediately price breakage, alert BOS, that is break of structure. Here again we have BOS, that is break of structure. Then here we have BOS. So you see the reason why you need to understand this as a new trader before you venture into trading. Because if you don't venture into trading, what happened to the other man the other time, that is what is going to happen to you because you are new to the system. So you need to understand it before you venture into it. When you go to your chart, it might not look easy like this, but don't worry. Remember, I told you that there is a software that helps you do this easily as a new beginner. Now, this is for uptrend. You know, when we read in our article other time, it said it helps us to identify a change of structure, right? Good. What price has been doing here is creating higher high, higher low, higher high, higher low. That is why what price has been doing when it retraces back to this point, the next thing you see, it will break again, creating what? This place at the higher high. This high here is higher than this, right? Why this high is also higher than this. So when price is moving towards the upside, it creates higher high. Why this low, this low is higher than this low. Then this one here is higher. Why this one here, this very one, let me, so this very one is higher than this one. So for uptrend, price create higher high, higher lows. But in downtrend, this is what price is doing. So what price is doing now, price is creating higher lows, lower low. Why do we say higher low? This low here, this higher low, this one, this low, lower low and higher low, lower low. This low is higher than this. This one is higher than this. Why this low here? Sorry, my drawing might not be that clear, but don't worry, just follow along. So why this low here? This low is lower than this low. Why this one is lower than this low? So in a nutshell, in the downtrend, price creates lower low. So when you are seeing price doing these things, what you need to do is wait for price to give you a signal towards the downside before you place your entry. So if you don't understand this concept as a new trader, then forget it. You are only gambling. That is just the plain truth. Now, we read in our article that it helps us to identify trend. Now, for us to take our sell in a better case, this is what we need to see. Let's assume we want to take a sell. Let's assume we want to take a sell order. This is what we are expecting to see on our charts. We want to see price come. Can you see? Break a structure. For this structure to be verified, we need to see price come back to this point. Immediately price comes here, then we take our sell while we put our stop loss here. So what we are expecting next is to take our sell and it comes down like this to create another low. Can you see? So that is why break of structure is very, very important. Otherwise, you keep losing your money to brokers. Because when you don't understand it, you are just gambling. Now, I believe you understand why you should understand structure. Now, when there is a change of structures, for instance, this was, let me give you an instance where it also helps you to identify if there's a change of structure. Let's assume price was giving us a sweet move like this. Please, if you are new to this channel, subscribe because you are going to get the best out of this point, out of this place. Now, price that has been giving you up, immediately it now give you a move like this. Do you see that it has broken this low, indicating a change of what? Character. Indicating what? A change of character or change of or break of structure. So what next you want to see if it's going to be relevant? You want to see price come to this zone before you take your sell. Before you take your sell order, you want to see price come to that zone, right? Then you take your sell towards the down part. My drawing may not be too clear, but just to get you understand what we mean by break of structure. What do you notice again? Break of structure. So price that was giving us higher high suddenly change and starts moving down. You see it? So with the help of identifying the structure, it helps you to decide and know what price is doing so that you don't place trade at a very risky zone. So that you don't place trade at a very risky zone. I think all that is said. Now let me take you to my chart and show you the software I was talking about and also draw attention to some things, most especially for those of you who are new to this platform. Good. Now this is the software I'm talking about. I don't do the marking. You can see the BOS. I believe you can see. You can see break of structure here. Like I said earlier on, if you are taking a buy here now, this is what price is doing. Price is going down. It won't favor you. So price has to come back before I will take my buy. I need to see price come to this zone before I decide to buy. And why am I buying and where am I going to exit? Already, this software has highlighted it for me. You can also see that at this point, it told me that price has broken structure towards the down. So I'm waiting for price to come into this zone here. But price didn't come to that zone, right? So which means I will not take entry. This is the reason why you need to have the knowledge. And if you don't have the knowledge, you need to have something to guide you. So if in some people's case, because it has broken structure, they might not even understand why market broke structure. So you just see them taking trade just based on candles. Some will tell you, okay, it's a red candle, let me quickly sell. It's a green candle, let me quickly buy. No. If you are doing that, you are doing rubbish. Now, do you see that there was a break of structure here? There was a break of structure. Price didn't go back to that place to confirm those structures are valid before we take a sell. So until price goes into those areas where this was the candle that led to the break of this structure, that was the last bullish candle. So we want to see price come to that zone before we take a sell. And we don't take sell anyhow. We make sure it gives us a formation of taking a sell towards the downside. Is that clear? So now it has given us a bullish candle here, telling us price is going up. And at the top we have another other block there, indicating that immediately price comes in, we should take a sell. That was why you see this sell. This was what satisfied this sell. This block here. Let me clean the chart and explain clearly. Because you really need to understand this class. Sorry if it's getting too long, but it's worth it. So this break of structure, this was the last candle, bullish candle that led to that break of structure. So we want, and it has created, the software has highlighted area where we want to see price come back to. And we see price come in here. You see this one retested it, and the next thing, it went down. So if you are taking your sell, immediately price got here to this zone, you will have been on profit because you saw it enter your area of interest. Now, when it was going, it still came back there second time, telling you there's a probability price can still push down. But before then, it created a break of structure towards the upside. So, because here is too close, you can neglect this move. But if it is a wide one or a clear market, then you can go in and take your buy, but immediately it is satisfied. So I believe today you've known the reasons why you are not making money, and you should know the correction you should do, which is understanding market structure. Then, if you want to have this software, I have a software put in place mainly for people who are trading the Deriv. on your laptop. I have a software in place for my students that I train. I made a video explaining in details how to use those softwares. So if you are interested, you can you can chat me up via the WhatsApp number in the description below so that you enroll for the training and you get everything you need. How you can trade synthetic indices without making losses. Already I've made a full video on that. So please, if you are new to this channel, kindly share, click the like button, and then if you want any other information, make sure you send it in the comment section. And don't forget to put on your notification bell because I'll be posting other things that is going to be enlightening you as a new trader and other strategies that you can trade on and make profit on a daily basis. Thanks for your time, guys. Cheers and stay blessed.